Hey everyone, welcome back to Corporate Decoder, the place where we unpack the biggest corporate secrets. And today we have a report that is a little bit like a mixed craft project. Some parts glitter, some parts a bit messy. Let's dive into Cricut Incorporated's latest financial filing. So what is Cricut telling us about their performance from July through September of 2025? Well, they're showing us a company that is navigating a complex market with some wins and some challenges. Let's look at the big picture. Cricut raked in $170.4 million in revenue for the third quarter of 2025. This is a small bump up from $167.9 million in the same period last year, a modest increase of about 2% now. Over the first 9 months of 2025, their total revenue hit $505 million, which is also a slight increase from $503 million for the same period in 2024. But here is where the story gets interesting. Cricut breaks its business into two main parts: platform and products. The platform side, which includes subscriptions and digital content, saw a solid increase in revenue. It jumped 7% to $82.8 million in the third quarter and grew 4% over the first 9 months to $243.5 million. What is driving this? Well, it seems their subscriber count is going up. This is good news because subscriptions can be a more stable and profitable revenue stream. Now, on the product side, that is where they sell their machines and crafty supplies. Things are a bit tougher. Products revenue actually dropped 3% in the third quarter to $87.7 million and declined 3% for the first 9 months to $261.7 million. It looks like they're selling fewer accessories and materials and maybe at a lower price too, although they are selling more machines and at a slightly higher price, which is a bit of a trade-off. Let's talk about profit margins. The overall gross profit increased by a significant 22% for the third quarter to $94.1 million and rose 14% for the first 9 months to $294 million. This is mostly thanks to the product segment where gross margin more than doubled. This is a huge improvement. This is largely due to a big drop in inventory impairment charges and lower procurement costs for their products, meaning they are not having to write off as much unsold inventory, and their raw material costs are also coming down. On the platform side, gross margin remains strong at 89% for both periods. This segment is consistently profitable. But for products gross margin, it went from a weak 11% in the third quarter of 2024 to a much healthier 23% in the same period of 2025. For the first 9 months, it improved from 20 to 29%. This shows they are managing their product costs much better, perhaps due to better supply chain management and reduced inventory write-downs. Looking at their expenses, research and development costs went up about 11% in both the quarter and the year to date. This suggests they are investing in future products and technology. They spent $16.9 million in the quarter and $49.3 million over the first 9 months. Sales and marketing expenses also ticked up. This is common as companies try to grow. They increased 6% for the quarter to $37.5 million and 8% year to date to $110 million. This increase is mainly due to more spending on advertising and marketing efforts. General and administrative costs, which cover things like salaries for non-technical staff, legal fees, and accounting, also saw a slight increase. They went up 5% for the quarter and 4% year to date to $17.1 million and $52.6 million respectively. This is likely due to increased costs for professional services and some foreign currency transaction losses. So what does all this mean for their bottom line? Net income for the third quarter of 2025 was $20.5 million, a nice jump from $11.5 million in the same quarter last year. For the first 9 months, net income was $68.9 million, up from $50.9 million in 2024. This is a strong sign that their operational improvements and increased profitability are boosting their earnings. Let's peek at their balance sheet. As of the 30th of September 2025, Cricut had about $187.9 million in cash and cash equivalents, and another $19.2 million in marketable securities. Their total assets were $564.3 million, liabilities were $205.9 million, and total stockholders' equity was $358.4 million. Cricut also announced a dividend. It declared a recurring semi-annual dividend of 10 cents per S-hair. They also paid out a special dividend of 75 cents per S-hair in July, but here is something interesting. They paid out significant dividends in $202.1 million in cash for the first 9 months of 2025. This is a large sum, and they also repurchased stock for nearly $19 million in the same period. This suggests they are returning capital to shareholders and also investing in the company themselves. When we look at their stock-based compensation, they have a lot of restricted stock units, and performance restricted stock units. For example, they have over 12.8 million restricted stock units. Outstanding additionally, they have nearly 19 million performance restricted stock units. Outstanding all these are incentives for their employees. One final detail that caught my eye is that their CEO Ashish Arora adopted a trading arrangement to sell up to approximately 2.3 million shares of their class. A common stock, this is a common move for executives to diversify their holdings, but it is always something investors watch closely. Overall, Cricut Inc. is showing signs of positive momentum, particularly with their platform business and improved product margins. While the product sales are still a bit sluggish, the overall increase in profitability and net income is a good sign. They are also actively managing their capital by issuing dividends and repurchasing shares. The investments in R&D and sales and marketing suggest they are looking to the future. Risks still exist, of course, like any company, but their ability to improve margins and grow their subscriber base is a strength. The direction seems positive, but they need to continue to boost those product sales. Alright, that is our breakdown of Cricut's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.